Let's start with the way we started the week, which was the news about Evergrande, that big property developer coming out of China. The markets on Monday really took a hit, although they came back. What do you make of Evergrande? Does it tell us anything about the Chinese economy more broadly?
Look, Evergrande's debt was selling at 25 cents on the dollar before this news. So a lot of people knew there was trouble here. I don't think this is anything like a Lehman moment. We're not going to have any kind of cascading financial collapse in China. But I also don't think everything's okay. I think the right way to think about this is as a portent, kind of like what happened in August of 2007 in the United States, kind of like what happened with Northern Rock in England, like some of the problems they had in Japan after their bubble burst. You're not going to see systemic financial collapse, but you are going to see a lot of strains in a Chinese growth model that's built on real estate. You are going to see a lot of losses that are going to have to get allocated somewhere, and it's going to make the task of growing the Chinese economy, which has been so real estate dependent, more difficult. This is a symptom, not a cause, but it's a symptom of something quite serious.
And it leads to the question that a lot of investors have is contagion. Is this likely to spread to other parts of the property market in China? Is it likely to spread to other parts of the Chinese economy and even beyond China?
I think that real estate problems are almost never isolated to single financial institutions. My sense is that people should be very much on guard here, and I don't think that any of us have full transparency into what's going on in China. Certainly, I don't, and my experience in financial life is the details you don't know are usually worse than the details you do know.
Larry, we started the week worried about Evergrande. By the middle of the week, a lot of investors were worried about what would happen with the Federal Reserve, the FOMC decision, and concerned about tapering and maybe taper tantrums. We had Jay Powell, the chair of the Fed, come out and say, pretty much, yes, we're going to taper. It's going to be later this year. It'll go into the middle of next year. And the market sort of said, that's fine with us. What did you make of what the Fed said?
I was glad they said it. I wish they'd said it more aggressively. I wish they were going to taper a bit faster. I'm not sure what they're waiting for. I think they may have missed an ideal window when you didn't have the Evergrande uncertainties, when you didn't have some of the uncertainties that we've had in the last month or so around COVID. But I think it was the right thing to do. I think we're going to see it look a little more stagflationary now for a time, because we're going to see, in my judgment, continuing inflation pressure, and we're also not going to see as rapid growth over the next 3 quarters as we've seen over the last 3 quarters, given labor shortages, given bottlenecks. And I think we saw something worrisome that was very surprising to me in the Michigan survey, saying that people don't think it's a good time to buy a car, they don't think it's a good time to buy a house. That's a kind of negative demand side indicator, and I'm not quite sure what to make of that, but it's certainly not something that's going to make the Fed's job any easier.
Larry, you mentioned stagflation. We had a set of projections come out that basically took down some of the growth projections and took up some of the inflation, at least currently, although they keep saying it's going to go away sooner or later. How close are we to stagflation?
I would say that if by stagflation you mean what we had in the 1970s, we're a long time away. If what you mean is simultaneous deterioration in terms of inflation and output growth, I think we're pretty close to getting there, and those kinds of moments are always the hardest moments for monetary policy. So I think the Fed's going to be challenged in the months ahead.
That's on the monetary side. Let's talk about the fiscal side. As we speak, the Congress has at least 4, you could argue more than that, big issues pending for the debt ceiling, funding the government, the new budget, as well as infrastructure. If you take all that melange, how should we come out? What's the right answer?
The debt limit, we all took out this debt. We all need this debt. There's no excuse for not passing it. Closing down the government, those are childish games of chicken. So those things, it's clear what the answer is, whatever exactly your ideology about the size of government is. My sense is that they should come together on a package that is large, but not as large as the $3.5 trillion that was put forward, that is more selective in the priorities that it sets, that is fully paid for on a year-by-year basis, and that emphasizes expanding the capacity of the economy rather than just providing support to spending. I think progressives are taking a very great risk when they start threatening to vote down infrastructure if they don't get everything they want. They are taking a very big risk with what I think is the moment of greatest opportunity to strengthen the American public sector that we've had in 40 years.
And finally, Larry, crypto had something of a rough week this week. We have a nominee for the Office of Controller coming out of the Biden administration who is hostile to crypto. And then at the very end of the week, we had China banning private transactions in crypto. What is going on with crypto? Why are regulators so apparently hostile, or at least deeply skeptical?
We'll start from the word crypto. It suggests a desire for secrecy with respect to large financial sums. And when you have large financial sums happening in secret, you have risks of money laundering, risks of supporting various kinds of criminal activities, risks of innocent people being ripped off. The truth is that we wouldn't have a viable airplane industry if we didn't regulate airline safety. We wouldn't have the transportation system we do if we didn't regulate automobile safety. And ultimately, for blockchain-based payments, that industry is going to do better, regulated in a sound way, rather than trying to be some kind of libertarian paradise. And I think the crypto community needs to recognize that and needs to work cooperatively with governments. And if they do that, I think that this innovation can be one of the important innovations of this period. But David, for years I've said this idea that it's going to be some kind of libertarian paradise where we're not going to be able to enforce bank rules like knowing your customer, or where we're going to be able to move money freely and avoid paying taxes, that if that's the basis for crypto, it's going to be the flimsiest of foundations. My best guess is that we'll get through this, but that would be my sense, and I think it's a recognition that all industries need to come to that are systemic in their importance. It's not entirely unlike the discussions of the big tech companies. They need to have a regulatory framework. They don't just need it for the protection of their consumers, they need it for the protection of themselves. We wouldn't have the New York Stock Exchange, as take another example, as the center of the world's stock markets, if we didn't have a strong SEC. And that's a competitive asset, ultimately, even if people don't like some of the rules some of the time. And I think that's the recognition the crypto community is going to need to come to.